Dear Chartered Accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of FCA Deepak Rao, a practicing Chartered Accountant. Daily news and updates for 4th November 2023. On November 2nd, 2023, the Central Board of Indirect Taxes and Customs announced an amnesty scheme for taxpayers facing challenges in filing appeals against demand orders. This scheme comes as a relief to those who missed appeal deadlines or had their appeals rejected on grounds of time limitations. Here are the crucial details you need to know about this significant development. The amnesty scheme applies to appeals against demand orders issued under the Central Goods and Service Tax Act 2017 on or before March 31, 2023. Taxpayers seeking the benefits of this scheme must file their appeals by January 31, 2024. To be eligible, taxpayers are required to make a pre-deposit of 12.5% of the disputed tax amount. Notably, at least 20% of this pre-deposit, equivalent to 2.5% of tax in the dispute, must be debited from the electronic cash ledger. The amnesty scheme does not apply to appeals related to demands that do not involve tax. In conclusion, the CBIC's amnesty scheme presents a valuable opportunity for taxpayers to rectify their appeals time-related issues and have their cases reconsidered. By adhering to the specified deadlines and pre-deposit requirements, eligible taxpayers can seek resolution for their concerns related to demand orders under the CGST Act. This move is seen as a positive step towards providing relief and ensuring fair tax proceedings. A recent circular issued by the Central Board of Indirect Taxes and Customs has brought significant clarity to the issue of goods and service tax on electricity charges for tenants, especially in commercial properties. The circular addresses the GST implications when electricity supply is bundled with renting immovable property and maintenance of premises. The circular clarifies that when electricity is supplied bundled with renting immovable property and or maintenance of premises, it constitutes a composite supply. Consequently, it will be subject to GST at the appropriate rate applicable to the principal supply, which is renting of immovable property or maintenance of premises as the case may be. Notably, residents in housing societies are exempted from GST on electricity charges. In cases where real estate owners, resident welfare associations, or developers supply electricity as a pure agent, the value of their supply will not include the electricity charges. Moreover, if they charge electricity based on actual usage, mirroring the rates charged by electricity state boards or distribution companies, they will be deemed to be acting as a pure agent for this supply. As a result of this clarification, the real estate sector is likely to see changes in the way electricity charges are structured and passed on to tenants. Landlords may consider GST costs on electricity when determining lease rental amounts, potentially leading to adjustments in rental expenses for commercial tenants. RBI has issued regulations aimed at governing entities that facilitate payment and settlement for online cross-border export or import transactions. These regulations include payment aggregators, which are entities that support the processing of domestic transactions in online mode. Now, the RBI aims to bring all entities involved in facilitating cross-border payment transactions for the import and export of goods and services under direct regulation. In order to enhance the ease of preparation of Scheme Information Document or SID by mutual funds and increase its readability for investors, SEBI undertook an exercise to revamp the format of SID. In the revised format, SEBI mandated AMCs to disclose the riskometer of the benchmark on the front page of the initial offering application form, scheme information documents, and key information memorandum, and in the common application form. The updated format is to be implemented with effect from April 1, 2024. With the Air Quality Index or AQI breaching hazardous levels in and around the National Capital Region, corporate India is stepping up measures to shield employees from the perils of toxic air. AQI above 150 is considered unhealthy. The AQI crossed 700 in many parts of the NCR on Thursday, forcing the shutting down of primary schools. Over a dozen companies, including Deloitte, KPMG, Panasonic, Big Basket, Blue Smart, Zepto, and CIEL HR Services, said they are taking initiatives including offering work from home options to employees, providing masks at office and to frontline staff, installing air purifiers and indoor plants, as well as having a doctor on call. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.